Welcome back. You're watching Business Morning on Channels Television. Just to remind you of some of the stories we're tracking at this time, Nigeria's acting president, Professor Yemi Osinbajo, is in Lagos for the groundbreaking of the Lagos-Ibadan Railway project. You can follow Channels Television for this developing story. Another developing story that we've got on our radar is the preparation to the temporal closure of the Nnamdi Azikiwe International Airport, Abuja. And of course, yesterday there was a World Press Conference where the Minister of Information, Alhaji Lai Mohammed, and the Minister of Transport, Rotimi Amechi, actually briefed the press, saying that the Kaduna International Airport is ready to serve as an alternative airport for Abuja-bound passengers. And speaking to my colleague, Channels Television correspondent in Kaduna, Chimeze Enyocha, he gave us an update on actually what's going on. So much activities with regard to security and making sure the facilities are ready for those passengers who will be using the airport, and of course other extracurricular activities, if you like, talking about other airport issues like having taxis and small businesses coming up to take advantage of this new beginning in the Kaduna International Airport for them. So we're talking about other issues now with regards to commodities. I'm being joined on the program by Ada Konobi, who is a senior research analyst with financial derivatives company. We're talking about the latest issues with regards oil. Good morning to you, Ada. It's great to have you on the program.
Good morning, Harriet.
So, taking a look at some of the issues that have come up very recently, Iraq and Angola, quite excited about the output cut and saying if it gets extended beyond June, they really do not mind. But for you, how do you think this is going to affect Nigeria?
Well, if you look at oil prices over the past days, it's been static at $55, $56 per barrel. And I mean, bringing it back to Nigeria, we see our production is going, slowly creeping back up, and that's evidence in the Q4 16 GDP report. So the oil and gas sector actually improved, and there's been some sort of a relative calm in the Niger Delta. So we expect our production to go up. So if our production, if we reach our production target of 2.2 or 2 million barrels per day, and oil prices stay above 55 or 56, I think that's much better compared to what it was this time last year when oil prices were 29. So we should see some sort of accretion or more dollar inflow, which should somewhat stabilize our currency.
Do you think that the markets will be too much affected by this latest shutting announced by Shell? Shell announced that over the weekend that it was halting production at its Bonga oil field to carry out maintenance. And we know that the Bonga oil field produces about 225,000 barrels per day of oil.
Well, yes, that could, have, it may not have a significant effect, but, however, there's, like I said earlier, there's been good news in the Niger Delta region. We expect our production to come up, and there's this new development that most of the international IOCs should relocate or move headquarters to the Niger Delta region. So it seems like the government is slowly giving into the wants of the, the Niger Delta residents to somewhat reduce the tension. So it's a gradual process. Our production is coming back up, and I think that is what we need now to stabilize the economy. But then taking it back to the global oil front, oil prices are still flat at $55, $56 per barrel. The OPEC members it seems like there's been a very good compliance rate between producers in the OPEC region, but then there's still some sort of skepticism. Who else would actually carry on? Russia's production in February was 11.11 million barrels per day, which is flat compared to what it was in January. So it seems like Russia is looking to steal Saudi Arabia's market share. Who knows? So there's been some sort of cheating. Looking at, so in the OPEC front, everyone is cooperating, right? But then there's still a lot of uncertainty as to what non-OPEC members will do. Bringing it back to what Trump is looking to do, oil rig count has gone up by, it's about 609 rigs, which is an 11-month high, and production is creeping up. U.S. inventories are swelling, and so that's why we're having oil prices move back and forth. Even if it goes up, you have Trump's stance in the U.S. pulling back, capping every gain. And there are results from China as well. They expect GDP for 2016 to be 6.5, which is lower compared to what it was in 2016. China is the second largest consumer of oil, and it's a very large economy. So there's just that sentiment that demand for oil from China will actually be low. So there's going to be more supply despite the cap in OPEC, but then minimal demand from large economies.
But taking a look at oil prices when we started at the beginning of the year and where we are now, what do you make of it?
I think it's doing very well. It's like it was about 25, 26 this time last year, WTI and Brent, but now it's about 55, so it's holding steady. And this compliance rates, the OPEC deal will actually last till June, and they will go back again to the board and discuss further. Do we carry this on, or do we, go on? But then most international agencies, for example, Goldman Sachs, believe that oil prices will average $60 per barrel for 2017, and the EIU forecast 56 upon $5 per barrel. So a lot of agencies are giving their rough estimates, but so far so good. Is much better than it was last year.
Do you think Nigeria will still want to have to be left out of having a production cut? You remember it was Iraq, Angola. I asked you at the beginning.
Yes.
Iraq, Angola, Nigeria. Do you think Nigeria will still want to be left out again, with regards complying to this production output cut?
Well, I guess these are all the things they're going to look into when they meet again, to evaluate what has happened so far from when they implemented the policy and now. So if our production creep up, I think it would be fair, but then I think they'd want to give Nigeria some time to rebuild what they've lost due to the militancy. But so far so good. That's some good light. There's light at the end of the tunnel. I know the major issue last year was our production. It's been waning, so we had all this, volatility, but then our production is picking up. Oil prices have remained steady. So if this carries on, we expect to see a growth in Q3 or Q2 slowly pick up. So it seems like the recession is slowly fading away.
Recession for the oil and gas sector?
Well, just generally, because, performance in the oil and gas sector is one of the drivers for economic growth in Nigeria anyway, so that is a major contribution to performance of the economy.
Okay, so with oil prices averaging around $56.5, and we have rising U.S. oil stock, and there's a possibility of a U.S. Fed hiking rates by about 25 basis points. What's your outlook for the market, especially as we know that this basically determines how investors trade oil and gas?
Well, the U.S. Fed increasing rates at a very valid point again as well. So, that signals some sort of strength in the U.S. economy. Trump has rolled out certain policies, increasing security and infrastructure. So, the U.S. economy is growing, hence the increase in rates. But then most of these commodities are traded in the dollar. So any dollar-denominated commodity would have foreign buyers reduce demand for that because it'd be more expensive to purchase that. So we expect oil prices to actually reflect that. So going forward, we expect prices to, pending the outcome of the meeting, so we expect a lot of volatility in prices, around the range of $55 or $54 to $56 per barrel.
And Nigeria can take advantage of that if they ramp up exports, that's basically.
Exactly, so Nigeria will take advantage of that. Fingers crossed, oil prices continue to creep up, then we kind of regain all that we've lost so far.
You seem quite confident that that's going to happen.
Well, it's honestly, there's a lot of uncertainty. So OPEC, like I said, are doing the best they can. The US is doing something else entirely. So that is why we're having oil prices still static at $55
and
per barrel.
As you already mentioned, if we have all players concerned talking about the OPEC members and the non-members complying to all the agreements, then maybe just maybe after June we could see oil prices not even at $60, maybe getting as high as $65, even $70 per barrel.
Yes, well, it depends. Like I said earlier, Russia's production for February was flat at 11.11. So I know Saudi Arabia has been, reducing production as much as it can. It seems like they're the major, they've jumped on the bandwagon, but then other producers, we're not sure how serious they're taking this.
Ada, thank you so much for joining me on the program today and, of course, sharing your thoughts with us on the latest on the oil and gas and the world of oil and gas.
Thank you.
Ada Konobi is a senior research analyst with Financial Derivatives Company.